Right, hello everybody, this is Adrian here from Trend Signal. Let's have a look at this week's market news for the week starting the 8th of October 2018. Strong data last week coupled with hawkish comments from Jay Powell, the chairman of the Federal Reserve, caused US bond market yields to jump sharply, pushing the yield on the US 10-year bond to 3.22%, the highest for several years and the biggest jump since the excitement generated when Trump was elected in November 2016. The jump in yields caused the US and then global equities to fall steeply in reaction to the continuing strength in the US economy and the near certainty now of a fourth rate rise in the US this December. The question traders ask themselves is this just another blip in bond yields that will see yields eventually fall back, or is there something more sustaining about this move? High yields in bonds can make equities look expensive, especially in the US, where prices rallied some 9% in Q3. Not just equities are affected, of course, and the US dollar firming throughout most of last week, only giving back some ground Friday following slightly disappointing non-farm payroll data. The strong US dollar and the jump in US yields continues to weaken emerging markets, and the Indian rupee and Argentina peso under significant pressure, with the latter hitting record lows again last week. Over the weekend, the Chinese authorities moved to support the economy with an injection of funds. The People's Bank of China, the PBOC, cut the reserve ratio by 1%, thereby injecting funds into the economy, and the bank described as reasonable and moderate and will not lead to depreciation pressure on the currency. We'll see. Chinese shares opened again Monday following the week-long Golden Week, where markets were shut with falls of more than 3%, largely in reaction to the fall in global equities last week and partly a disappointment over the PBOC move. As for data this week, it's a very sparse calendar, but there are a few macro events that could affect the markets there. Columbus Day on Monday, the 8th of October in the US, although most markets are open, so it shouldn't really affect the main principal markets there. Monday, Tuesday, data-wise, not a lot really, apart from a smattering of CB speakers that could potentially throw a spanner in the works. We'll see. On Wednesday, we've got the UK manufacturing production data looking for up 0.1%. Sensitive to the UK economy, of course. Brexit negotiations resume. European leaders gather to discuss Article 50 and Brexit. EU's chief Brexit negotiator, Michel Barnier, will then present the draft political declaration in Brussels. This will outline the EU's future trading relationship with the UK. Later on Wednesday, we've got the US PPI, which is a precursor to inflationary pressures. Again, still plus 0.2% there, so still relatively benign. On Thursday, US core CPI, they're up 0.2%, pretty much the same as above there. That's largely it. I mean, as far as equities are concerned, no sooner has Q2 earnings season ended than we start Q3 earnings season with 7 companies out this week from the S&P 500. Needless to say, expectations remain quite high. Really, I guess a word to the wise, really watch out for anything that might push yields higher along with then the US dollar. So have a great week, everybody, and tune in next week for more of the same. Bye-bye for now.
If you would like more information about trading the right way, Trend Signal is giving you the opportunity to see and hear about its services live at a free online seminar. Take a look at the Trend Signal website for the latest events and to book your free place.